We are not even going to mess around with an intro on this video because June is going to speak for itself, and the key is going to be stability. And what I mean by stability is there really isn't a whole lot of change from when we talked about this a few weeks ago. Mortgage rates are essentially the same, still around 7%. Inventory has crept up a little bit, which is the one thing I'm going to spend some time on in a little bit because that is not normal in June to see an increase like that. Days on market still very stable. Prices, even though, again, they're consistently increasing, and we actually flipped positive now for single-family homes after being in the negative for the last few months, they're generally stable percentages too. So as for new listings did see a little bit of pop here in June. At least we're on pace to see a pop by the end of this month compared to May, which is a little bit abnormal. So we did see more new listings in June slightly than anticipated, based off of most of our months so far coming in less than the same month last year. Whereas June is going to be just about the same as what we had last year in the mid 80s. So that is good news. That is one of the primary reasons why inventory did increase this month when it normally does not be more new listings than anticipated. Pending sales, again, this is a strong month of June. Better than the last two. Not as good as 2021, but better than the last two. And it's potentially going to be our strongest month this year in 2024, which, again, looking at those blue bars is not exactly normal. So there are plenty of people out here still buying homes. And I've had the pleasure of working with several of them / you if you're watching right now. And it's a bit of a surprise. I didn't expect this much activity to be happening once we've well cleared Memorial Day weekend, but here we are nonetheless. Single families and condos that are closing, it's going to be a fairly down month compared to past Junes. But again, I don't read a whole lot into that metric in and of itself on a monthly basis. In aggregate, we are trending well below the total sales compared to the same point last year. So that's one thing that, again, I will definitely hit on with some hard statistics in the next video. So make sure, if you haven't already, subscribe and turn on notifications so that you know when it comes. Inventory in single family land did jump down a bit after skyrocketing, which is not a bad thing, right? It's not a healthy thing for the market to see 9 months of inventory on a consistent basis. We usually want to see things hovering around 6, maybe 7 months of inventory. We had a good month. Plenty of homes went under contract. Plenty of single family homes went under contract, including a lot of the high end ones. But what I did see, and again, I'll touch on this more in the next video, a lot of those high-end homes, the actual sale price is a good bit below asking. So my whole mantra has been there's going to be some deals on single family, and let alone in the luxury high-end space, there's likely going to be some softness on prices. Not going to take a victory lap yet, but it seems some of that is starting to come to fruition. We'll see if it continues. Now, prices, again, here that we were going negative for quite a few months, and now we are back going in the positive direction. High-end home selling will do that for sure. So again, I don't anticipate we're going to crack that 1,750,000 barrier anytime soon. I think we'll be floating between those two fun little lines at 1.5 and 1.75 for the foreseeable future. And again, pretty stable here on days on market 2 months in a row, and generally at about the average, the better part of the last year, with a couple low blips that we had early this year. Now, condos continue to be consistent, and it's mind-blowing. Their level of consistency, as demonstrated in this chart, it's kind of wild. So still very, very stable there. Days on market, very, very stable as well. Now, speed is where we start to tell a not different story, but a slightly modified version of the story. So it's a little hard to see in this slide, but if we compare June, that rightmost bar, 2024, and we look back at what we had in June of last year, things are moving a little bit faster. Which again, we're seeing more homes going under contract. While we are seeing a little bit more new listings than expected, it's washing out, and things are still moving quicker than they did this time last year. So again, it's a little bit abnormal to have this much activity in June, but without that much, inventory would have grown much faster. And even though I dug on this as soon as I saw, hey, wait a second, this 6-month blue line has started to trend upward, that means things are slowing down. If you compare that to the past June specifically, where you see that little spike before it then drops, it's exactly what happened last year. So I'm not going to read too much into that at this juncture. If we maintain a high speed, which again is a slower market, if we maintain that going over the next few months, when last year we actually saw that drop, then we will potentially raise some red flags. But stability, again, is the mantra for this video. Mortgage rates still going to likely stay stable. I had to change this slide for the first time in a while. I said it would be floating between 7 and 7.5% for the majority of the year, including the rest of the year. I think we're done testing the high end of that range. I think we're going to stay roughly around 7, maybe crack under a little bit for the remainder of the year, because again, I don't expect a Fed rate cut at this point to happen. If it does at all, it'll be at the very end of the year in December, and it will not have enough of an impact to really matter for 2024. 2025, that'll tell another tale. Inventory wise, and we have had inventory rise in June. That is not what happened last June. It's now going to be something, again, that I monitor going forward. Are we starting a new trend where it's going to continue to build as more inventory comes? Are new listings on the rise? I don't see that yet, but I'm going to be watching very, very closely. And again, the number of homes that have gone under contract compared to last year, that gap is shrinking because the past 2 months in May and June were stronger than I had anticipated and stronger than we had last year, which is a little bit alarming. But I suppose as consumer confidence changes a little bit, as some of the turmoil that we've been bathing in for the better part of 2024 starts to relax a little bit, or at least fall out of the news cycle, people are going to do what they're going to do, which ultimately has been the story of Ocean City, right? When the time is right for you or for whoever it is, going to take the plunge so long as you can. Now, last but not least, price wise, again, I think we're going to stay pretty stable the rest of the year. I don't expect fluctuations high at all. But again, there will be some values to come in the fall. So if you are a deal hunter, that's what you're going to start keeping your eye out for really in September is when I think we start flagging some properties to track. And quite frankly, if you are a client of mine watching this, there are a couple that I'm already tracking for you that I'm not going to be talking about on these videos, because that is, as much as I share on here, and I cannot jeopardize anything active that we are working on with clients. So with that said, this was a short and sweet video. If you have any questions whatsoever, you can reach out. I've had quite a few new buyers coming on board here, but I do have room for a few more. So if you need help, don't hesitate to reach out. Give me a shout. If you have any questions and you don't want to reach out directly, you can always drop them down in the comments below. But I appreciate you hanging out with me as always. I will see you next time.